Hello everyone and welcome to the Industry Insight session at JM Financial Center along with Team Phenomena. Today, I'm Chaitanya Sachdeva from Team Phenomena and along with me is Parul.
So, I am Parul Sharma and I am a PhD student at IIM Udaipur in Finance and Accounting area.
Today, we are privileged to host one of our esteemed speaker who is a leader in the financial market, Mr. Jasmin Mehta, who is a Senior Vice President at HDFC AMC Ltd. And today, our conversation will revolve around a topic known as the new financial order, where we'll understand that what the new financial order means and how India moved towards in the next phase of its growth. So to start with that thing, Indian financial sector basically means that how we are shifting towards from a traditional method to a more tech-driven method. And on building on that topic, sir, I want to ask that Indian financial sector is clearly going through a structural shift. So how this thing will help us to make this sustainable growth and will have a better advantage in our upcoming future?
So what is important for the investment, that is what we need to understand. When we are becoming one of the largest economy in the world, there is a need also that the way in which we invest also need to pass through a serious amount of change, and that is what we have seen over a period of last 5-10 years with the help of regulator SEBI, with the help of RBI, right, where they allowed fintech companies to come up, right, the bankers, the eKYC, SIP promotion, the way in which they have the education seminar across the country, and making investors understand that what is one of the better ways of investments. All this put together have created a serious quality amount of landscape in the current scenario, right, for the investments, and that will help investors to go a long way in creation of their wealth journey so far as the India is concerned. So I think we are moving in absolute right direction. The way in which one can transact on the digital platforms, right, the emergence of new digital platforms, emergence of paperless investment procedure, right, all these help quite a lot, in which the mutual fund industry has played a big role, right, where they allowed number of people's KYC to happen, so that helps the country, right, to comply with the anti-money laundering laws as well, right. At the same point in time, provided one of the best opportunity of investment through systematic investment plan. Right. Now today, systematic investment plan on a monthly basis are having almost 29,500 crore, right, and that is a huge sum. That translates into close to 3.5 lakh crore of equity investment on a yearly basis. Now if you count that into dollar terms, it is close to $40 billion, right? That is a huge amount, right, in a country like India, where the equity penetration among the household savings is much lesser. So I think we are moving in the right direction, right, and I think that will help our markets to go a long way.
Like building upon this, I have one question that as you said that SIPs have constituted a great amount in leading the India towards this new direction, right? So, but that also creates the problem of the concentration of wealth, right? Because millions of people are entrusting their money to the hands of few. So there are very few AMCs in India. So do you think that this concentration of wealth will become a problem?
So asset management companies are only asset managers, okay? They are not keeping the money of the investors. They are investing investors' money with different kinds of companies. There are 5,500 companies listed in Indian exchanges, right? So anyway, this money is not actually going to one or two companies. They are definitely going to more than 500,000 companies, right? So I think there is no concentration of risk. Those who are investing via SIP, they are actually giving their money in better hands, right? Better hands in a sense, those who are capable of doing right kind of an investment decision in most possible times. Not necessarily all times, but definitely most possible times, right? So I think there is no concentration of wealth in that particular sense. Not only that, as the mutual fund industry is evolving, there are number of newcomers who are coming into this industry, right? You would have heard that some of the companies also got the licenses to start their mutual fund business very recently, right? Even the world over, the bigger mutual funds, those who would have left the country now are coming back again, right? Because they understood the financial inclusion has already taken place in India, right? And we are moving in a direction wherein, there is a large chunk of investor which probably may come to invest their savings with the mutual fund. So I think this is the best business to be in.
So building upon this, I want to ask that what are the different things that fund managers they keep in mind when they are evaluating certain projects?
Right. So when we are talking about a mutual fund or asset management company, generally it is not being driven by only one individual. So here the process, right, is more important, right? And in any fund management setup of a bigger company, generally you first find number of you can say research analysts. They may be taking care of respective sectors in which they are expert, right? They study the sectors and then they also studies within that sector which are the companies. Okay, when they study all these companies, right, they present a case for the inclusion of that company into probable investment list, right? Once they do so, right, then there is an investment committee also, right, in which even the CIO and other people are also part of it. They also evaluate the prospects of this company from their point of view, right? Once they understand the prospects of, whether this is an investable option or not, right, they give their understanding, right, and post that company can be considered for investment. So in a good asset management company, the process is more, collective efforts rather than individual prerogative. Okay, so post that, fund manager definitely has the liberty to allocate the fund, to choose the stock, right? So there is a robust process which is definitely in place so far as the mutual fund industry is concerned, because as I told you, there are more than 5,000, 6,000 companies in India which are listed, right? It is impossible for any individual to study all the companies, right? There are a number of different sectors. No fund manager can have 100% understanding of all kinds of sectors. So it is, you can say, a very properly laid down procedures, right? And they have the enough expertise and a big team to handle the entire investment objective, right? So it is, of course, important for a fund manager and fund management and to select a stock. Yes, they have the liberty to do so, but at the back end, all these efforts are there.
Sir, I want to ask one follow-up question on this thing. We've seen a shift in a trend that retailers are investing more in the financial market.
So can you come again?
The retailers are investing more in the financial markets. We have seen a good momentum in SIPs.
Correct.
So do you think our market is mature enough to digest the stress out whenever there is some stress out, when there is a negative shift in the market? So as the retailer portion has increased, so they drastically sell the shares, and was that investing now AMC, because earlier that proportion was very less, now it's become very high. So is it impacting much?
So long as this investment, retail investment, are also channelized through, you can say, asset management companies, chances of failures are lesser in comparison to direct investing, right? Because here there is a serious amount of research, as we discussed in the earlier part, right? There is a serious amount of research. They have a capacity to understand the business. They don't just buy share price, they buy the businesses, they become partner in the businesses, right? And they understand the business very well, and post that they take an informed decision, right? Which may not be the case with the normal retail investor. So that is the reason institutionalizing of the retail investment via mutual fund, I think it is probably one of the better ways, of investment, right? And if at all more and more retail investors participate in that manner, it can make a serious difference in actually chances of, you can say, in actually making a better wealth, right? And probably avoid probably all kinds of mistakes while investing. So I think retail investors should definitely go ahead and invest through the mutual funds.
Okay, so the next question I want to ask is particularly related to the MBA students who are pursuing MBA. We are soon going to enter into the financial market, the corporate world. So what is the advice that you want to give to us so that we'll just adjust and will contribute significantly well in the changing financial models?
So definitely one important advice is, to understand the mutual fund way of investments, right? Why it is important that, when you are not a doctor, if you try to become a doctor and operate yourself, you can very well understand what the results are. So investments is also a 24/7, 365 days job, right? It actually goes way beyond than buying only a share price, right? It also is a profession which requires all kinds of efforts, the way in which any other profession requires. And if we are better off going to any professional, right, and if at all we take the services of a professional, chances of results positive, right, are much larger. And that is what exactly I mean to say that. So the generation or the MBA students we are talking about, they can be the flag bearer to this. So because if you would have understood this, you can actually explain to a larger part of the society, right, and move them towards the better way of investments, right? I think that is what I think any MBA student can do.
Okay, so thank you so much, sir, for
Thank
your
you.
valuable
Thank you
time.
very much for inviting me. Thank
yes,
you.
The session
It was
very
nice talking to both of you.
The pleasure is all ours.
Thank you.
So, on behalf of JM Financial team and Team Phenomena, we'd like to extend a thank you to you for the podcast and for coming here. And to the entire audience, thank you so much for joining us today. And we'll come up with a more insightful session for you.
Thank you.
Thank you.
Thank you.